Good afternoon. Good Tuesday afternoon, everybody. Yes, I am live here down on the CBOE floor in the S&P 500 options pit. How is everyone doing? Can you hear and see me okay? Yes, happy Tuesday all. And there's a lot of happy people down here today after that big Bears win last night. That's the kind of game they typically give away, but there's a lot of happy people here. So glad everybody's with us. Boy, what a difference an hour or two makes. And I'm going to be talking about this in a couple hours when I join Liz Clayman on Fox Business at 2 Central. What a difference an hour makes, right? We came in this morning and overnight, the markets looked like you know what. This morning, for the first hour or two, we, trending on lows of the day. And here we are now. The S&Ps are up 10 points on the day. VIX is still up on the day, but off its low. The high of the day in the VIX was 2294. We are now settling in at 1977. We're going to talk a lot about the VIX. And boy, someone mentioned this in one of the rooms earlier today. I'm not sure if it was Sarunas maybe, but mentioned that, boy, maybe this is a time you get in a position, you get out quickly and, take profits when you have them. And my response to that was, this is very, very similar to the type of trade that we had for several months after Liberation Day, a few months back, where the market really couldn't make up its mind. The market was trading with extreme volatility. And sure, get in a position and maybe you don't hit that profit target, but because of the dynamic of the way the market was trading, we got to adjust the way that we trade. So I think that is, thank you. What are your options? I think that is, at least till something changes here, that is probably what the trend of this market is going to be now, where we get in a position of how, why, when, where, all that good stuff of why we get into something doesn't change, but maybe what we're looking to accomplish does change a little bit. Does that make sense to everybody? It is busy down here. There's kind of a lull right now, but it is busy down here. The both the S&P futures volume and options volume is really, really robust. All right. So here we are. We're right in the center of it. As many of you know, again, I am in the S&P 500 options pit. The VIX pit is literally just to my left over here. But I've been getting a lot of questions about the VIX. So let's talk about it a little bit. Okay. Some of you may know this already. I think this will be a good refresher though for many of you. And yeah, um, there he is, right? Because that's what the VIX kind of describes to a lot of people, right? It's the fear index, right? That's what the people watching CNBC and Fox Business and that's what they are led to believe, that the VIX is really the fear index. Is that really so? And do many of you feel that way? If that's what you're told to believe, then maybe. If that is kind of what you read, and if that is how you are seeing the correlation of the VIX with typically up and down days in the marketplace, the VIX rises when the market's down, blah blah blah, that's what we all can be led to believe. Okay, so let's just start from the beginning. Okay, let's just start from the beginning. What is the VIX? Okay, it's an index that gauges the volatility that investors expect in the market. That's all it is. And what is sometimes difficult for people to understand is that it really doesn't reflect current or recent volatility. It's more of a leading indicator measuring the level of volatility that's expected, over a coming period of time. Okay. And so that's why it's really kind of it's a leading indicator, but traders, we look at it almost as a reversal. sort of indicator. Okay. Typically, when we see a big rise in the VIX, and I've got a 1 year chart up here right now. Okay. Um, Typically, when we see the VIX rise, that's because something has already happened, right? And typically that can be an indicator that we are going to see a reversal, just like just like when I talk about all the time, and you hear me preach about it every day. I talked about it a lot yesterday, and it was certainly in the week ahead article that you all received on Sunday. Um, buy when you can, not when you have to, right? I mean, it's a simple concept that many people do not adhere to. Simple mantra to go with, right? And when things are complacent, things are just, kind of rosy and just running along as they should be, which is when, okay, the VIX is here, right? That's when people typically least think about protection. It's usually when the what hits the fan. That's when people start piling in and say, oh my God, I better protect myself now. I better get that insurance, right? So, what do we typically see there? Okay. Joy Deep, send me an email, please. Send me an email. We'll make sure you probably unsubscribed at some point, but just shoot me an email. We'll make sure you get added back in. But what do these points in the VIX typically represent? The market going up, because those times, you guys all able to hear and see that behind me? Yes, we are live. It is busy down here. It is busy. S&P's now back kind of towards their high of the day here. 67, it's a few points off their high of the day. So typically when we see those spikes up in the VIX, that is investor fear. That is usually too little, too late. Okay. Now, we can never ever time when something is going to happen in the market, like what happened yesterday. Like what happened Friday. Sorry about that. What happened Friday? Because especially in this time, and we haven't seen this for a while, which has added to a lot of this complacency. But in the world we live in, we are literally a tweet away from the market moving 3-5%. Okay. Well, Joy Deep, I can tell you with 100% confidence that if you used to receive it and you don't anymore, it's because you inadvertently subscribed. If you never, you know, yeah, you said you got dropped out. So it happens all the time where someone hits an unsubscribe button. No big deal. So, um, it's when the fear is already in the marketplace and people are piling in to buy VIX calls, downside protection, whatever it may be. When we see that volatility spike, that can signal a reversal. Okay. So, how is the VIX calculated, right? We can all look at a number and say, like I'm saying right now, the VIX is currently at the moment right here, right now, it is 1959. Okay, great. It's 1959. What the heck does that mean, right? The VIX is calculated using average weighted real-time call and put prices across the S&P index. So what's trading right here, okay, that have expiration of 23 to 37 days out, which is why, if you understand the VIX and we talk about it, the VIX is the expectation of market volatility over 30 days. Okay, so that result gives you the implied 30-day volatility of this index right here. Okay, and the reason it's based off of the S&P 500, is because about 80%, it's actually higher now just because of the Nvidias and some of the big stocks in the world, but close to about 85% of the value of US stocks is represented in the S&P 500. Okay, so the VIX is based off of S&P 500 option implied volatility. Does everybody understand that? Does anybody have any questions? And can everybody hear me again? Because I don't see any responses here since Joy Deep's last comment, and I want to make sure everybody is on board. Okay, thank you, Al. Thank you, Al. This is are you guys able to see behind me? I should probably just step off to the side here because it is super, 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 super busy. Oh, now they just called someone out. They called someone out for a birthday, so I'm sure that guy will get some drinks bought for him later on. I am going to go to the word of the day early here today, guys, because I've got to cut out 5 minutes early today because um, I have another interview at 12:30. Okay. Ross, yeah, VIX, you got to be really careful trading VIX options. You got to be really careful. And we're going to go into that why, especially if you're buying options further out, because we have to remember that VIX is a futures product. But before we do that, yes, last night, big, big, big win for the Bears, kind of a comeback win from what happened last year. I agree about that. All right, so go Bears. My little Lou says go Bears. I saw her last night just before kickoff, and she said, Pops, go Bears. Winning ugly is fine as long as they get the W. Winning ugly is fine. Leave that up here for another minute or so. And while we're doing that, you guys make sure you tune back in at 2 o'clock Central. It's usually like 2:02, but I'll be right back down here on the floor speaking with Liz Clayman, talking about the market action. All right, let's get back to the VIX here. Okay, historical VIX levels. Okay, we know that historically, the VIX is negatively correlated with stock market performance. It goes up when there's uncertainty, when there's some panic in the markets. And this is just a generalization here. Okay. We don't ever see a VIX of 0, but had to start somewhere. So typically when we see the VIX in the lower teens, I'm not even going to say sub 10, but it's single digits, but though it has been there a little bit. But when we see it in the lower teens, what does that kind of tell us? It means there's a lot of complacency out there. General optimism for the markets. The markets are probably grinding higher, 15 to 20. That's kind of the area that we've been in for most of the last 6 months. Okay. We've kind of been in that range, 15 to 20 over the last 6 months or so, or at least since probably May. So maybe 4 or 5 months. Okay. And that is, I'm, moderate, right? It means kind of things are still going well, but be on the alert a little bit. Okay. 20 to 25, which is where we are sitting. Well, now we're at 1950. We were up to almost 23 today. That means there's something going on. There is something brewing. 25-30, yeah, we're really, really seeing some volatility. And then 30 plus is something we don't see often at all. It's happened literally, a handful of times. Um, and that's something that we don't typically see. And that also can be a great signal for a reversal. Now, when we talk about the VIX, like where it's trading right now at 19 and a half, okay, What does that really mean, right? We all can understand, okay, the VIX is 15, it's low, it's 25, it's high. What does it really mean? Well, we always talk about when we're looking at individual stocks, we always talk about expected move, right? And we always talk about that one standard deviation move, right? That bell curve, right? So the VIX is quoted in percentage points, and that is exactly what it represents. So VIX of 15, that represents an expected annualized change, okay, with a one standard deviation or 68% probability of 15% up or down. Okay, that's for 1 year. Okay, does everybody get that? So right now, the VIX 19, what that is suggesting is that over the next year, we would expect to see an expected range in the S&Ps of plus or minus 19% from where we are right now. Okay, now, if we want to break that down to a shorter period of time, okay, like let's say a day, a week, a month, whatever it is, a quarter, okay, this is where the math gets a little tricky. And I'm not here to, be a math teacher or statistics teacher or anything, but I think it's really important that you understand how to figure this out. Okay, with the wheel closing in 2 minutes, let me get Lou back up on the screen here. Lucky Lou says, go Bears. Everybody that wants in, go Bears. Okay, so if we want to calculate the VIX expected move over the next month, let's say, okay, it's not just taking whatever value, 19 and a half where we are right now, or 15 like I have in the explanation here, and dividing it by 12. We need to divide that by the square root of 12. Okay, so 15 divided by the square root of 12 gives us around a 4.33% move over the next 30 days. Okay, if we wanted to figure out the expected move over the next week, we don't divide by 52. We take the VIX divided by the square root of 52. Okay. One of the things, again, I don't want to get too far in the weeds, but one of the things that how the VIX is calculated differently than a lot of other products out there is that the VIX uses calendar day annualization. Now, a lot of times you will see other products using the amount of trading days, which is about 252 in a year. But the VIX uses calendar day annualization. So we're looking at that 15 divided by 365. Okay. So again, the calendar day approach, it doesn't account for the number of trading days in a calendar year when the markets are not open. Okay. You like the weeds? Okay, me too. Now, so important to understand this. So important to understand this. I talked about this earlier. Okay. The VIX measures implied volatility. So just when we are looking at a stock, whether it's for earnings or whether it is just, normal, and we look at implied volatility, what does the word implied mean? Implied means in the future, not historical backwards looking. So the VIX measures the level of volatility looking in the future. Okay. It is a future looking calculation. Now, before I go into the VIX curve, the VIX futures curve here, I want to let everybody know and remind everybody, and Michael, hopefully you can get that up on the screen here. Charlie Moon is doing a live Webby tonight, a live webinar. Excuse me, everyone. Excuse me. He's doing a live webinar on his momentum and AI trading tonight. There is the link. Thank you for putting that up there. So if anybody is interested in joining Charlie live tonight, that will be at 7 p.m. Central Time. 7 p.m. Central Time. All right, let me get my screen up here. This is a great website. I've talked about this before, everybody. The CBOE website has just a ton of relevant information. A ton of relevant information. Okay. I am on just, the main page here, the volatility index, the VIX overview here. Have fun at it. Go in there and just, if you're interested in finding out more about volatility products, because the VIX is not the only volatility product here, go right ahead. Okay. So here is current. This is where we are right now. Okay. The spot, meaning the VIX expires every Wednesday morning. Okay. The VIX options do not expire on Fridays like typical weekly options do. VIX options expire on Wednesday mornings. So tomorrow morning at the opening of the market, there will be a VIX settlement price. Doesn't necessarily mean that it's where it closed tonight. It will be settled on the opening of the market tomorrow morning. So here is a 1 month look at the VIX. You can see how complacent things have been. Here is a 3-month live look, and then we're going to put up that 1 year, and we're going to see that big spike that I had up there before from April Liberation Day. Okay, now let's go to VIX futures. Does everybody see this right here? Does everybody see this right here? It's always recorded, Randy. You can always go to our YouTube channel to find this and replay it. Okay, so remember, the VIX is a futures product. It is not an equity product. What's the difference? So when we're trading one of our stocks and we choose an expiration, regardless if that expiration is a day away, a week away, a month away, a year away, the option prices are all tied to the same stock price. They're all relevant to the same stock price. In any futures product, the VIX being one of them, the options you trade are tied specific to the price of that VIX future. So for instance, even though the VIX right now is trading 19, and I know there's like a 5-minute delay on the CBOE feed here. It's actually trading 1946 right now, but for safety's sake, we'll say it's 1978. Okay. If you're buying January VIX options or trading anything out to January, all of those option prices will be based off of that 2121, not 1978 or 1946, where the VIX is currently trading right this moment. So when trading a futures product, you always, always, always need to be aware of that, which is why it makes it very, very difficult to trade time spreads, calendar spreads, diagonal spreads, because one option that you're trading is tied to one stock price or one VIX price, and the other option you're trading is tied to a different price. Now, the guys down here, the guys and gals trading the VIX down here do it all the time, right? They all know how to hedge that appropriately. For the average retail investor, that is a nuance that most people really do not understand, because your options are based on a certain stock price. However, in a futures product, that stock price doesn't need to move the same for every expiration. So one example here would be if the market really, really took a nosedive right now, like let's say a tweet comes out, whatever happens later today, and it's really bad for the market, and the market goes down, God, 1,000 points. S&Ps go down 100 points. What are we going to see happen? Yeah, all of the futures are going to move. All of the futures prices are going to go up. But this short term here is going to skyrocket, while some of the back month, the further out in time options, they'll go up, but not at the same pace. And then we can see the opposite happening also. So there's a very, very, very intricate nuance to how time spreads would trade. All right, everybody, I can continue this. I won't be on tomorrow. Howard is going to be on tomorrow, but I can continue this if you would all like. But let's get to our wheel spin of the day. And the wheel spin of the day, the winner will go into the final spin on October 31st for a trip to our Traders Summit in Vegas in December. So here we go. There we go. And the winner today for that wheel is it Harris, James, Jennifer. Jennifer, now this is great. And this is something I've said for a long time. Jennifer, you're already going, right? You're already going. You are signed up. You are registered to go. That's okay. Because if you happen to win the wheel on October 31st, we will give you your money back. Okay? Perfect. So, yes, Jennifer, you still want to be in that wheel. Okay. Awesome, everybody. I got to run. I am going to be on an interview in about 3 minutes on RFD TV. If anybody wants to join me, I will be right here for this interview with Scott Shellady. Appreciate all of you. Have a great, great rest of the day, and we'll see you all tomorrow.